Okay, I just lost over $9 million in trading and I want to share this. And yes, it is 9 million, but it is a simulated account. So it's not real money. But I was practicing an aggressive strategy and I learned something and I want to share so that you don't make the same mistake. So let's take a look. You can see right here, 8.6 million, the total 8.5. This is $9.1 million. Massive, massive losses. So let's go ahead and dive in on how to avoid this loss. So the first thing I want to share is I was doing something called a bull call debit spread. Actually, no, typo, bear call. Bear call. It was supposed to go down. I was thinking it was going to go down. And it was on the QQQ. And it was a 580. I sold the 585 call and I bought the 584. You can see it. I'll show you in a second where you can see it. But right here, I did 2,000 contracts. 2,000 contracts, which is just absolutely insane. But it was practice and I was, trying to really push the envelope and see what I could do in the demo account. Right, but then the expiration, it was zero-DTE, zero-DTE. And what that means is it's 0 days to expiration. You buy and sell the option on the same day. And what's great about that is that it's day trading and you can make money really fast. What's bad about it is if the market goes against you, you can get screwed like what happened to me. And the way that I lost money is that I ended up having to sell short shares on the S&P 500. I'll share more about that in a minute. But so essentially what I did is I bought the lower strike, the 584, and I sold the higher strike, the 585, which makes it a bearish credit spread. Pretty straightforward trade, except it was on the zero-DTE. And so this is called a bear call spread, and it meant that I thought price was going lower. And it was a strategy that I was practicing, and I'll share more about that in a minute. Oh, right here. I posted a video on here 4 months ago about this strategy. It's called the QQQ Power Play, and it is an awesome strategy. If you want to learn it, I'll have a link to that later. But I was practicing this zero-DTE strategy. And I might do more about this kind of stuff if I get positive feedback in the comments. So let me visualize what it actually had happened. So here's the candle. It was 9/11, and you can see right here where it says the close, the close right here, 584.08. That's a very important number because 584.08. I wrote that number in play there. Okay. And so that's the candle. It closed at 584.08. And you can see there it is. Again, it closed. Now, the thing that's interesting about that, it was 8 cents over 0.08. My credit spread would have simply expired worthless if it was at 583, meaning I would have taken a full loss. And it would have been fine. A full loss is bad. But if you're managing your risk and you're not risking all your account, it's fine. I was over risking. It was a demo account. I was over risking. Here's a little hot take. When you're trading demo, trade it the way you would trade a real account. Don't act like a hot shot, which is what I was doing. I did learn stuff though, but I want to model something in real life. So I would have had no shares. All right. So, but however, it closed at 584.08, right? And so that means that it was just above the 584. And that meant, what did that mean? That I was now assigned. I got assigned 200,000 negative shares, short shares on the QQQ. 200,000 at $584. And so it closed at 584.08. So I'm down 8 cents, no big deal, right? But then the problem is if we go back up to that chart, it opened the next day way up. And I was like, oh man, I'm down 10,000, I'm down 50,000 or whatever. I was like, oh, I'm not closing this. I'm going to wait for the dip, right? Well, guess what? The dip never came. The dip never came. Let's go back up. Look. the dip. It opened up the next day, higher, higher, and then it did dip close, but it never got back down, right? And now I'm sitting here with a $9 million loss. So it's not a pretty sight. Now, another note though, your broker, how do we avoid this, right? How do we avoid this is what we need to know. Number one is don't do zero DTE. Okay, that's one way. Number two, if your broker knows that you don't have enough capital to cover the trade, they will close it for you. So if this was happening on a real account and you didn't have the money, the broker's not going to give you the shares. The only reason they do that on this demo account is to show you what would happen if you did have the money. So in this case, I would not have had the money in real life to go with the 200,000 short shares, right? That's just the way it is. But there it is. It's 200,000 short. So it was something that happened on demo that probably wouldn't happen in real life. It would probably just be wiped out and they'd give you a big loss, right? But right now I'm at 9 million and I was hoping I'd be able to let this thing roll and make some big money. But even then it's just for pretend. So what's it really matter? Mainly for learning. And it's a demo account and it's important to understand the risks when trading. We need to understand how do we avoid these assignments. And so in the previous video, I said I'm closing at 21 days, right? But if you're doing a zero DTE strategy, you just have to really focus on trading small. And one thing I do is on a zero DTE, nowadays, I'm only going for 10% target, right? Like, so if I get a 20-cent credit on a zero DTE, I'm trying to get out at 10 cents, 10% right away, in and out, couple minutes, take one and done, take the trade, make $100 in and out. That's how I do it because why? Because then if I lose, it's not a big deal. I just did a $100 spread. If I'm making $10 per spread, I win 10 of them in a row. I make 100, I lose one. I lose everything, right? I lose 10 wins in a row. But the thing is, you can win, like one of my other videos, we won 28 in a row. You win 28 in a row, you make $280, you lose 100. Yes, it's not fun. You get set back, but then you go and win another 28 in a row. That's the idea where you're doing very high probability strategies. And that's why I like using Schwab is they have a demo account, Think or Swim. If you want to open up a real live account, you get a free demo account with it. If you want that, I have a link for this broker in the description just so you can check it out. It's a lot of fun. And now I want to share something that I learned too. I'm doing a 2-for-1 deal. And I'm reading a book right now, one that I read 10, 15 years ago, but I like to read books and I read them again, right? I try to get that knowledge and stuff I learn even more. It's called The Richest Man in Babylon. And at the end of the book, there was a story about a farmer that was eating, he had 10 chickens and they would get 10 eggs and he was eating 10 eggs a day. And he had nothing to show for. And that's really an analogy for Americans. If we're making $10 a day at the job, we're spending $10. And yes, inflation sucks. I get it. Everything's so expensive. But the fact of the matter is, we should be saving one egg, right? We should be saving $1, right? Because you save one and in 10 days, the guy had what? He had 10 eggs. And then what does he do with those 10 eggs? He can sell them. And then what happens when he sells the 10 eggs? He can buy another chicken. And now he's getting 2 eggs, right? And then instead of getting 20 eggs in the basket, and 10 eggs in the basket, he's getting 20. And what else happens when you eat only 9 eggs? Well, you thin down. You don't get fat. You lose some weight, right? So we should be spending less than what we make, right? And I know inflation's hard, and I know it's so easy with credit to buy stuff. I have done the same stuff, right? I've made all the same mistakes. But the point is, we can change how we live, and we can start to have a surplus and then invest that surplus and create awesome results. And so one small discipline daily, exponential growth over time. So here's what I do, right? Is I put money in my broker account daily. What else do? I daily make an options trade. So now I have multiple sources of revenue. I'm daily growing my account through two avenues. One is I'm growing through daily deposits, and two, I'm growing through daily cash flow, right? And what's going to happen? What's happening is exponential growth, and that's what I'm trying to teach. I have a story in my book about how when I first started at the young age of 19, I made $30,000 in the markets, and I only earned $200 a week in my paycheck. I was a private, an E1. Those of you in the military, you guys might know, E1. I was making jack nothing, $200, and I still had 30K. By the time I got out, I had more than the officers in the bank, right? Because I was smart with my money. And I'm teaching you because I want you all to be smart with your money. And so that's just a little lesson on top of freedom income options. That's what I'm teaching here. With all of these strategies, we're teaching slow, responsible growth, and we're talking about being a little responsible with our spending and spending less than what we make. Right? And if we do that, we're all going to be doing really well. And just one little side note here, and that is I do have a Substack. I'll put the link in the description, but I'm never going to do trade ideas on YouTube. I just don't think it's a great platform for that. So on Substack, I have education and trade ideas, and I have free trade ideas. You guys can get that. I just did one today. Check it out, and you can get a lot of trade ideas, and it's a really cool thing. All right. And then the last thing is, if you want to check out that video, click the link. I can never do that the right way. Click the link and get this video and learn this strategy. It's a really cool strategy. All right. Thanks for watching. Leave a comment. I have been so busy commenting on all the other videos. It's been awesome. Leave a comment, please. I need to help people. And I can't do that if you're not commenting. So thanks, and I really appreciate all the support I've been getting on my videos.